traders, and welcome back to the introduction of TCE trading. In this second video we will focus our attention on some of the most important aspects and misconceptions of trading. So let's start with a video. What is trading? Trading is the process of buying and selling different financial assets in order to profit from the price difference. And in reality, you can trade pretty much any financial asset or financial instrument. However, here in TCE trading, we focus on the following markets. First of all, we have, of course, Forex. This is one of the most liquid markets out there and it's one of the best to trade. We also focus on the stock market, but we mainly focus on stock indices rather than individual stock. We also trade different commodities, mainly focusing on precious metals. And last but not least, of course, we have some interest into cryptocurrencies. And in my personal opinion, cryptocurrencies may be one of the most risky assets to trade, but if you have correct risk management and you have the proper discipline, this can be one of the most profitable markets out there. Now, having discussed what trading is, let's focus on the myths versus the reality of trading. And as I already mentioned, this is more focused on today's or the actual marketing regarding trading. So first of all, you will have heard that trading is very easy. Well, this is a myth because in reality it takes time, it takes dedication, and most important of all, it takes discipline, just as any other business would. Now you might have heard that trading is kind of something like a get-rich-quick scheme, but in reality it's very risky without proper risk management, and you will be hearing risk management a lot because this is one of the things that we focus most here on TCE trading. Now, in regards to leverage, a lot of people say that you can do a lot of money with low capital. But in reality, profits will depend on two essential things. First of all, on your trading capital and also as well on your risk management. And what we mean by this is that you are not really gonna become a millionaire if you have $1,000 in your trading account and you are risking about 1 or 2% per trade. We need to be real about this. And finally, but not least, trading is gambling. And the reality is that trading is a combination of different things. First, you have your market analysis, which we are gonna be calling edge, plus your risk management, plus the discipline and the trading psychology that you are gonna use while trading. Now, I really introduced this slide just to portray how ridiculous some of the marketing is. As I already told you, a lot of people and a lot of marketing will portray trading as you becoming a millionaire, but let's take a more objective approach to becoming a millionaire. Let's really analyze it. So to do this, we're gonna make some assumptions, and let me say that these assumptions are very hard in practice, and I would even say that they're impossible in practice. Not all of them, but let's continue. So first of all, let's assume that we have no losing months. Now, this is not impossible, but of course in practice you will not have always some profit. Maybe some months you will be losing some. Now let's assume that you make 10% every month, and as well this will be very difficult in practice because sometimes you will make more than that, or sometimes you will make even less, or maybe you will have some losses. In any case, let's assume as well that we are not having any withdrawals from the account and that we won't make any type of tax payments. Of course, this is impossible in reality, and I will not advise you to avoid tax payments. Of course, you have to take responsibility of your obligations. But in any case, let's continue and say if you introduce an initial capital of $1,000, how it would look like to become a millionaire. And for this, I have this interest compounded monthly table around here, where you will see that the number of years that really takes you to have a total balance of over 1 million is around here, which is around 6 to 7 years of trading with all of these assumptions being considered. Now, in reality, again, if you take away all of these assumptions, of course it's gonna be even more time, and of course it's gonna be even more difficult. Also, you need to take into consideration that if you are serious with trading, you can always use it as savings, or you can put additional money, so this will vary depending on your specific situation. So now that we have debunked some of the false marketing, aka becoming a millionaire is very easy with trading, let's now take a look at the real advantages of trading. So first of all, mobility. And this is something I have been benefiting from in the last months, as I have been traveling a lot. All you really need to be trading is an internet connection and a computer. Time flexibility is also a big one, but it is a partial one. If you are what we call a swing trader, then you might not really care about the time, and you might do your analysis whenever you have time or whenever you can. But if you are doing day trading or scalping, you might want to trade during the most liquid times, where volume and price movements are bigger. Now let's discuss independence. You will be your very own boss. Why? Because you will take all the decisions and you will be assuming all of the responsibility of your actions. You will choose when to take a trade, when to buy, when to sell, etc. And even though this can be a double-edged sword, we will try our best to support you through your trading journey. Now, the last benefit is that you have no salary limits, but of course this comes with a caveat. It is true that you will not have anyone who tells you what you must earn or ask permission for a raise, but your profits will depend, of course, on your trading capital and risk management, meaning that if you use compounding, your profits will keep growing over time. Now let's talk about the 5 fundamental truths of trading. So the first one is that anything can happen. And we have seen this in the market nowadays, with the current pandemic strongly affecting the financial market overall, and even oil depleting into negative territory. Number 2, you don't need to know what's gonna happen in order to make money. And the reason is because as traders, we don't try to predict the market. We see what is happening and use a trading plan and risk management to profit of what we will call an educated guess. Number 3, there is a random distribution between wins and losses for any successful strategy or edge. So let's say after testing your strategy and arriving at a percentage, you might have obtained around 60 or maybe 70% of whatever you obtain chances of winning a trade. While this might be statistically correct, we cannot control if we have 3 or maybe 4 losers at the beginning of our trading, or even more if we were to extend our trading universe. Now, number 4, an edge is nothing more than an indication of a higher probability of one thing happening over another. This means that even though we can have an edge of, let's say, 60 to 70%, we don't necessarily have to win a trade. This is only an indication that the outcome might be more feasible according to our strategy. And the last one is that every moment in the market is unique. And the reason again is because the market is really composed of traders, institutions, and businesses all over the world. It is really impossible that everyone will do the exact same thing again in the future, and that all the exact conditions will be met again. Well, in any case, traders, this was video 2 of 3 of the introduction of TCE trading. If you are interested in knowing more about us, you can contact us at support@tcetrading.com. You can also visit our webpage and follow us in our other social media.